Hi everyone, welcome to BISP Solutions. My name is Abdullah Khan, and today we are going to see the topic consolidation with subsidiary and an associate uh, with the help of FCCS application. So let's begin. Prepared our case scenario. So in our case scenario, we have a holding and a subsidiary. So we have prepared the separate financial statements or individual financial statements for the holding as well as for the subsidiary. So for subsidiary, we have greater than 51% of holding, which is in our case, we have taken the holding as 80%. So we have a control over this entity. Therefore, we'll consolidate all our assets and liabilities. Uh, Another entity we have taken is an associate where we don't have a control, but we have a significant influence that is greater than 20% of the holding, but less than or equal to 50%. So significant influence is an influence which is greater than 20%. So in such a case, what we will do is that we'll just take the profit of the associate that has been earned during the period after which we have acquired the significant influence over it and add the profit to our investment amount, uh, the investment that we have done in the associate, and just present it in our consolidated balance sheet. So in case of an associate, we don't aggregate the total assets and the liabilities, but we just aggregate or keep on accumulating or increasing our investment in the equity by adding the profits or our share of profits in the associate period, during the given period for which we are doing the consolidation, and present it in our CFS. So there's no consolidation uh, as such of assets or the liabilities in case of an associate. Similarly, that goes in the case of joint venture as well, but that we'll take a look in a later case scenario. So, but for subsidiary, we'll have to like consolidate all the assets and the liabilities. Like PP, here's 50,000 PP uh, in the holding, so we'll consolidate with the subsidiary. The subsidiaries PP of 10,000, and similarly for all the other assets as well as the liabilities. Now, uh, if we see we have an investment of 50,000 in the subsidiary, and in equity we have given the investment amount as 20,000 uh, for the investment in associate. We can also call it as an investment in equity companies. So that will get accumulated over the period of time with the amount of profits earned by the associate, with the amount of our share of profits earned by the associate, and so on. So, like I was saying, that all the assets as well as the liabilities will get accumulated. So we have short-term receivables in both the holding and the subsidiary, which will get accumulated. We have BNK checking account, that is the bank account, which will get accumulated. Common stock will only come of the holding and the consolidated financial statement, and a retained earnings figure will also get accumulated with the subsidiaries retained share of retained earnings in the CFS. So retained earnings here we have considered as 50,000 for the holding, and for subsidiary is 15,000. Short-term payables are 60,000 in holding, but are not there in the subsidiary separate financial statements or standalone financial statements. Now, in the consolidated financial statements, as per the practical example that we have created, both of the PP figures will get consolidated 100%. So 50,000 plus 10,000, 60,000. The investment in equity amount will get accreted by the amount of our share of profit in the associate. So uh, it will get accreted to 28,000. So we'll see how it happens. So we are assuming that the associates retain earnings for the period would be say 20,000, and our share is 40%. So 40% of 20,000 is 8,000. So 8,000 would be added in the investment amount. So that would become as 28,000. So the entry that would be passed in the consolidated financial statements would be investment and equity account debited, retained earnings of or the consolidated retained earnings account credited by the 8,000. So here we have seen we have presented 28,000 in the consolidated financial statements. Now the next amount is the goodwill amount, which is calculated in our working. So the investment in subsidiary is 50,000. We will subtract the net assets. The net assets is the our share of common stock in the subsidiary company, so which is 80%, and the goodwill amount therefore is 30,000. Then we have the minority interest, so 5,000 would be coming from 20,000, 20%, and we will add the portion of profit of the subsidiary which is attributable to the minority interest, which is 3,000. So the profit, that is the retained earnings for the current year, is 15,000 for the subsidiary, and 20% of 15,000 is 3,000. So we have accumulated the amount of minority interest, uh, which comes to 8,000 now. We'll go back to our consolidated balance sheet and validate the rest of the figures. So goodwill, we have seen short-term receivables will be consolidated 100%. P&K checking account will get consolidated 100%. Common stock will come for only the holding. Then retained earnings. For retained earnings, we uh, have done some working. So retained earnings would be 50,000 plus the portion of the subsidiaries profits, that is 20,000, 80% of 20,000. Sorry, 80% of 15,000, which would be 12,000, and 8,000 is the profit from the associate company, for which we have created a journal entry here. So that would be accumulated in our retained earnings, in our consolidated retained earnings. So that brings us to the figure of 70,000. Minority we've already seen. Short-term payables is only for the holding. So our total of the balance sheet comes to 1,98,000. Now we will validate whether these figures uh, come in the consolidated financial statements when we create such a financial statements through our FCCS application. So for that, we'll first go to the application. So first we'll go to consolidation and go to the data ownership structure. We have to select the period. I am taking the period as January, year as FY 2015. And I'm going to take my entity as C500, the consolidated entity. This is my group, which is C500. So I can like change this to holding. There's no issue in that. C501 is my holding. C502 is my subsidiary of 80%, and C503 is my equity, that is my associate company, where I have an ownership of 40%. So I'm not having any control. So I'll just click on a no here, which I have already done. And no minority interest would be calculated in this case. In this case, a 20% minority will be calculated. I'll save the changes and recompute the ownership structure once again. I'll select the correct period. And now we'll go to the smart view and try to validate the data, whether the same data is showcasing in our application that we have selected. We'll try to put these figures and see whether our result comes appropriately. So first we'll go to the smart view. I've already created the structure. So this is the data input sheet. The BNK checking account is having 20,000 in the holding and 10,000 in the subsidiary. So we'll input this. Then the short-term receivables is 30 and 20. So we'll input that. PPE is 50 and 10,000. That is machinery I'm taking. 50 and 10,000. Then there is a short-term payable which is 60,000. Common stock figures. So since we want a retained earnings of 50, so we'll take the revenue as say 60 and COGS as 10. In the second case, we want it as 15, so we can take any figure. I have put all the figures, and now we can just click on submit. Also, one more thing, we need to give the retained earnings of the current year for C503. So we'll just like, since we needed a profit of 20,000 in our associates, so we can give any figure, and it will say 30 and 10 here. We click on submit, and all my data is feeded. Very important thing that needs to be taken care of is we have to provide the correct movements for all the accounts where we are inputting the data, and the correct POVs as well. Now we'll just put our investments. So investment in subsidiary, for that we have taken the 502 entity as our intercompany, and the investment amount that we have figured out is 50,000 to be validated. And for equity companies investment, we have figured out 20,000 as the amount. So we'll take that and submit. And then we'll just go to the output sheet where we have taken the C-level entity, that is C500, and see whether our total and the rest of the numbers are getting validated. So we'll go to the application and try to just try to run the rule of data consolidation. Go to the data status form and just run the business rule. Consolidate. Select my entity. It is already selected here, C500. I'll have to check whether my figures are coming appropriately in my consolidated account. So here we can see the total of the assets is 198. Rest as well, 30,000 it is getting added on from here. 50,000 it is getting added on from here. Goodwill is 30,000 as we have seen in our application, in our example file. So it is also getting validated. Investment in equity companies is 28,000, which we have seen in our Excel file. Fixed assets are getting total 50 and 10. And another important figure is the minority interest, which is 8,000, and it is the same as uh, we have calculated in our Excel file. The retained earnings figure is also 70,000, and there is no difference in our balance sheet. So that's it for today. In case you have any queries, you can get back to us through our website. Thanks and have a great day ahead.